My name is Scott Redler, Chief Strategic Officer at T3Live.com. It's post-election day, and here we are at the same desk, doing our same routine, getting levels together, tactics ready to go, and we'll continue to do that moving forward. It's been a very stressful slash active slash, whatever you want to call it, past few days. Where a lot of traders were trying to figure out how to catch a certain move, how to position a certain way, how to, not miss out. And I know me too. I've tried to position myself, in a certain way to benefit depending on the different outcomes. And sometimes it's hard to do, but then once a situation is kind of behind us, then we figure out how to maneuver ourselves moving forward. So I talk about active sequences. How could you figure out when a new active sequence starts and how to measure it on whether or not it can continue and how to be in a certain approach in order to take advantage of it? We've had 9 active sequences over the course of this past year, from the long to the short side to do a little less side. So with that being said, if you look at the chart of the S&P cash to go over the first potential active sequence and then what we need to look at moving forward, you see right here. So on this day, if you look at the S&P cash, was the first day you had a potential rally attempt. The first potential candlestick to give you clues to cover some shorts, maybe look for a few longs, look for relative strength, look for the leaders, position yourself into a scenario that might be low risk through options or whatever, but in a way to figure out, can we start a new active sequence? Same way here, this candlestick started the new active sequence to the downside that triggered below this ascending channel. And then from here on out, the bears had control of this active sequence all the way down to the September 24th lows. Okay, and then right here, you had a red dog reversal also, which gave you a signal to maybe cover your shorts because we didn't break below this area. Then you had a wide range bar to show a little power. And then if you remember, we cleared this descending trend line with a gap up. So this 3-day move was not the easiest to catch, but that's the 3-day move that started that active sequence. So if you missed the first part of the move, how do you catch the next part of the move? Well, if you remember here, you had a gap up that went sideways. Okay, and then right here it tested it and it held it. So right in here was your time to position into some key names to massage your portfolio approach after the start of this active sequence to the upside. All right, so this was October 20th, and this was 33.40. So from 33.40, this move was above the 8-day moving average all the way up to 35.49. So another 200 handles. So if you didn't catch the red dog reversal bottom there, you were able to be involved for a move for 1, 2, 3, 4, 5, 6, 7, another 2 weeks or so. Okay, so from here, if you remember, we had this inside wedge, okay, that wound up resolving lower. So that kind of took that active sequence off the table for continuation. And then lo and behold, we came into the low from Friday. Now, I will say this active sequence was not easy. Why was this one not as easy? Because A, the rally started at 5 minutes to 4 on a Friday. Okay, if you look back, what did it really do? It took out 32.59 and reclaimed it. So that showed you that we weren't heading down to the September low. So that was your day one of a new active sequence. What gave a little bit of conviction or a little confidence that maybe this is the start of something? You had a higher low, right? A higher low above this area. That's what you deem as constructive. And then what happened? You had a move into the moving averages. Didn't get rejected. You had a move where tech got a little bit better. So that was your 3-day move. Then obviously, it was definitely hard to have all-in longs or certain positions going into a binary event like an election. So anyway, this now is your 4-day move. So this to me was not the easiest to catch. It really wasn't. And I made some money. I feel like what could I have done different? How could I have had more in the money options? How, any which way, look at it and figure out how you did it. So the question is now, does this move give you an additional move in time back towards perhaps 35.49 or 35.88 or higher. So now could kind of move this up because this is your point of reference. So same way you had this first move up, okay, and then it went sideways for 4 days before continuing. I would think, that this should go sideways in here. While this is going sideways, some of the stocks that just had 3-4 day moves probably consolidate. You could probably day trade. You could probably own some things, buy a dip, let them reset up before potentially maybe showing relative strength and continuing, which I'll get into. So I would say moving forward, in order for this active sequence to be any good, it probably needs to hold this 34.05. It could even fill this gap, okay, towards 33.89, okay? And by this point, these moving averages that we were below here and below here, we're back above. And if you take a quick look back here one more time, okay, if you remember the last active sequence, that was really, a good one. Basically you had your low, you had the reclaiming the moving averages. So this was like the first move, came in, held, and then it gave you an additional move all the way through July and August. That was a fantastic active sequence. This active sequence, it pretty much started really right here, okay, and got confirmed on this candlestick. I think was my best quarter of my career. It was also led by tech. Before, boom, you had the wide range bar that gave you an active sequence to the downside. So the question is, are we going to get a little sideways action here, consolidate, and then take out 34.86 to retest 35.49 or 35.88. So a little sideways action in here, holding above the moving averages will satisfy my moving average rules. And then perhaps, in that time period is where you see the best acting stocks act better and go. Same way some of the names, that didn't pull back during this last 4-day move post earnings were the first ones to make new all-time highs, like a Google. So at this point, this was your day one, higher low, a little bit of power, follow through. Now you need some time in here to prove it could hold above before maybe going again. So that's like my thoughts on the S&P cash. So now let's talk about 3 or 4 names that I'm going to trade and I'm going to try and embrace and I'm going to try and stay with that are always in my repertoire. Usually it's high beta tech. So the first one I want to go over is the potential new active sequence in Apple. So here's Apple. Okay, Apple is a name that I trade all the time. Apple is a name that I think I've had on my go-to list literally since I started trading back in 1998. So when you get an active sequence in Apple that you could stay with and you could use a tier system, and you could buy a dip versus a level, let it go green, add cash, or let it reset up, then you get a tradable pattern to add to get some follow through. You can make a lot of money in an active sequence like Apple. Now if you look here, this active sequence, okay, first of all, this is where the bearish active sequence started, and this was in September. Came all the way into first. Finally, you had your low, then you had your higher low. So this started a new active sequence to the upside. Okay, then you had a descending trend line here that it broke above, so you could have, used your tier system to trade around. And from here, you had your first move up, came in, held the moving averages, poked its head above this wedge type pattern, and gave you a move to 125. So from about 105 to 125, that was a 20-point active sequence where the stock acted special, where you could have held it and traded around it. So from here, this is when it got faulty, when it was the first one to go negative and show some active weakness. And then here's when it broke this ascending channel to get me out of my long or just get you away from that active sequence. Okay, and then here it's been to the downside, plus you had earnings. And now finally, didn't show complete relative strength to be all in. But for me, I was like, okay, if we have a president or if tech gets better, if I want to be in some options. So on this day, I tweeted to you and rather relaxed as so I bought the 115 calls for like 2.25 to anticipate. When I anticipate, I use calls because options are risk is premium paid. Okay, so that was into here. Then yesterday, I was like, okay, Apple perked up, but looked a little bit different. Let me take some long. And then I took it into today, and I still have it. And now you have the potential of a new active sequence, okay, versus anticipating. Okay, now what would make this active sequence special? A, it's got to hold above 112.25. Why is this potentially special now? It's back above the moving averages. What does Redler dog like? He likes to be in something above the moving averages. Why? Because glass is half full versus half empty. So now, I'm taking home Apple. Apple right now is at 115.05. So if Apple were to open down tomorrow, like just say the futures are down 15, 20 handles because we just ran 100 plus handles, which would make some sense, I would be then buying some Versa level to go green to add cash flow to massage my position that I already have. And then maybe keep it on or just trade it. Then if we go sideways, I would then potentially be a buyer once it takes out 115.59 to see a move towards 117.20. This could take 2 days, it could take 3 days, or tomorrow we get a gap up, it opens above 115.59, I sell some, because that's what I do when a gap is in my favor. I hold some and then I try and buy some back. So this is like a day 1, day 2, maybe get a day 3 into 117.20, or it consolidates and gives you actually a stronger pattern to buy more shares from. So this right now has the ingredients of a continuation trade, so I'm staying long it. I'll show you 2 more patterns that have potential active sequences that you could potentially hold, massage, and trade around. Another one is Facebook. Facebook, you had a big gap up, all right, held 278, went sideways, pushed above 285.24, and at this point, if this gap, which is kind of like a pro earnings gap, holds, it keeps the shorts trapped, it keeps people thinking they have to get in there fast, so you could be long first 278.60, that's your calculated play. Then, if it goes like tomorrow, just say we open down, because maybe whatever the macro news is, you could buy it verse here for it to potentially go green and add cash flow around whatever it is you took home. Then after a little bit of time, all of a sudden today's high is 288.94. You could use 288.94 as your pivot resistance, right? 288.94 is resistance. So where did that just go? So in order for Facebook to go to 304, which I'm not saying it's going to, but in order to do that, it's got to get above 288.94 in order to see that level. But as of now, you're gapped above the moving averages, and the longer we hold above this, the more or the higher the probability it continues. If you look at Google, that showed relative strength and power. If you look here, this gap never got filled while the market was actually just trying to put a bottom formation. So that's why Google is the first FANG type name to make a new high on the year. Look, Google wasn't sold on earnings like most names. It held the post-earnings gap of 1601, which was right here, and is up above 1681, which is this pivot. We'll see if it can clear 1726, which would be a good sign for tech. Why? Because it's showing power. Why? It'll create FOMO elsewhere. So now this is 1770. So let's put 1770 in here. That is today's high. So if Facebook is going to follow the footsteps of Google, it's going to have to get above today's high in the future. And for this to continue, now you could see, hey, this has another gap, and we'll see if this digests above here. I missed Google, and which it is what it is. My history with Google has been a little tricky lately, but at least it followed the rules. It held the earnings gap, went sideways. The market finally had a little bit of a push in power. It went to highs first. In August, it didn't get to highs. Amazon went first. Apple went first. So money rotates and things situate. Okay, let's talk about Amazon. Amazon could also have a new potential active sequence to the upside for you to massage and use a tier system with. So here is Amazon. Amazon, why is this a candidate, to have a new active sequence? Well, first of all, it's Amazon, probably one of the best companies in the world. This was your channel. Here's where basically your active sequence to the downside was intact. And then finally today, what did it do? It gapped above the moving averages and held it and showed strength, 31.39. Okay, not only did it break this small downtrend, it has a nice gap to trade against. So if you were long Amazon, potentially this could be your stop, and maybe it works its way back to 32.91. Maybe it works its way all the way back to the highs of the year. Google's already through the highs of the year, so we'll see how this goes. Anyway, how would I, handle tomorrow if I was long? I sold puts. because I feel like with the size of this 2-day move, the way I've been trading Amazon, if we were down 20, 30 handles tomorrow, which I'm not saying we're going to be, it could be down 50 points after being up 195. That would only be 25, a 25% move from today than here. I was like, you know what, I'd rather sell options for Friday for $7, $8, and give me some downside exposure. And then if we open down tomorrow, I'll be buying it to go green, and then maybe it takes out today's high tomorrow of 32.44. If it opens up, okay, I'm already short some puts, and I'll keep the premium. If you're long it because you're like, hey, this is a nice big day one gap up, close near the highs of the day. I'm long it. It opens up 30 points. You trim some into 32.91, which is about 50 points higher, and you deserve to make the money because you're taking it home. If it opens down, you have to be prepared to say, hey, this just had a big move of whatever it did. It should hold 3,200, which is like 40 points. It could still, gap to here and hold it and then go green, and that's how you add and trade around it. And then see if this starts a new active sequence. Remember, this active sequence is started at the red dog reversal here, had a gap up, held it pretty much, went up, then held it again right here, took all the moving averages and triggered above this little wedge formation and gave you a move all the way to 34.96. This was a nice active sequence that started right here with the red dog reversal. So now potentially this gap up could be the ignition for this one. Or not. If all of a sudden Amazon's down 50 tomorrow and then it closes into this gap with a big wide range candle, then it's not a special scenario where you had to just day trade it. But right now it's got to have the benefit of the doubt because of the way the market traded the past few days with the power, with the participation across the board. So that is my lesson on how to look for an active sequence in the indices and how to sustain it and massage it and keep your approach with risk on. And those were 3 names that if this tech rally is going to continue the next 2 to 5 weeks or so or more, then these are 3 names that you could potentially hold, massage, and trade. Now, if you don't take overnights, you could use the pivots for cash flow based on the futures in the morning, and I go over that as well. So let's move on. Tesla. Not a big deal. This one traded through 407.50, went as high as whatever this was. It was weaker today, so I'm not in Tesla. I do think like if it opened down tomorrow, I'm not saying it's going to, I would be a buyer to see if it could reclaim 417. As long as it holds, this area, I think it's just fine. It did have a pretty big move from the low to this high, and this high is what, 435. They had you couldn't make it that easy for everybody. So that's 435, and then you have 445 and then 465.90. I am long pins. Why? Because this also wasn't really sold on earnings, had a big gap up stretch, let the moving averages catch up. I bought this 2 days ago versus 56.31, and I'm going to stay with it. I'm long Snap. Snap also, held higher. Looks like at some point it's going to take out this 44-ish area and then go. If it's going to go to 50, what does it have to get through? 44. Okay, not saying it's going to go to 50, but has the ingredients to make higher highs considering it had great earnings, it had a big gap up, had some follow through and just consolidated. And if we're going to go, that's a potential leader to go, in my humble opinion. NEO, what a fantastic move. We've made a lot of money, and some guys are mad at me that I wasn't in for this move. I apologize. Can't be in for every move, but this is probably my top 5 P&L. So what did I catch that I felt like was more? Actually, this was my biggest winner. One of my biggest winners of today was a name that I've only traded a few times. Why? Because I connected the dots. This was an EV player in China. I played it over here, failed, played it again in here, watching NEO make higher highs, and boom, look at the size of that move. And cleared 25. I took some home. Actually, as we speak right now, it's at 28.48, giving me some follow through. I might sell a little bit just because I have it overnight, and why not? Actually, I'm going to sell a little bit here so you can actually watch it on my VTF. Just triggered. Anyway, so let it go. I'm going to let it go. This is a big, powerful day above its IPO. I just took a little bit off, but I'm going to hold some. LI, another one. Because of NEO, you connect the dots and say, hey, what was strong? Maybe other things could be strong. This, 1, 2, 3, a little bit extended. So now let this hold here and digest perhaps, and then maybe it can go again. This has nothing to do with the Chinese EV market, but this is just this little Canadian EV player that had a big move. I remember playing it here, holding it there, went as high as 5 and change up to 6. And now it seems as if, this sector's getting hot. It's not very quality. I've had it a few times, and, we'll see if we get some follow through. See if we can get above this 330 and, make a move towards 4. So I am long it. I was long it a few different times. I bought it here, got stopped out, bought it here. I probably could have stayed with it. I didn't. So now I'm going to try and stay with it a little bit longer. Yesterday we got into some of those bean down SPACs. We were able to sell some strength and buy some back. HYLN, give a move from here to the moving averages. Now it might need to go sideways a little bit before retraces a little bit higher. Here's one of what got broken. So down here, first time I tried it, made really good money today. Now I'm in less, and I'll see if it could continue to go sideways to continue to keep this potential new active sequence intact. This FC, whatever it's called, wasn't this KC AC, didn't really do much today, hanging in here. But I bought it correctly, and I trimmed some into some strength, and so I held some, and we'll see if it can go sideways and pop again. Just a little something off the beaten path to do. GE I've had for 2 weeks, and today held where it had to. I actually bought a dip, and looks like it's going to continue higher. Bank of America I had for a few days. Thank God I sold some strength, so I was able to buy some back a little bit today. This will be my stop in here. I'm not that big, so we'll see how it goes. Palantir, I still like a lot. Hanging out, rebuilding. I bought it in here, added a lot, sold most, sold a little bit more, bought some back, bought a little bit more, sold some, and now it's looking like, hey, it's almost ready to go. Next time it gets into the 11s, instead of me trimming, I might be adding the same way I added when it took out this 980. But we'll see. Looks pretty good. NBIO, which we've been in now for a while. Day early, I think Ash came out with who's going to be there, and Mustang will be there, and they actually have a poster and an abstract. Some people said they just had a poster, but they have an abstract also, and they're going to be presenting new data, not old data. Last time, NBIO, from the time that people knew it was going to be in Ash, okay, which was last November. Where's last November? According to my friend Glenn, he said it went from like 280 to 4. Where's November? Right here. People knew it was going to go into Ash, and it went from here to as high as 388. Pulled in and went as high, went into the the 465 area. Or something. Yeah, it went from here to where is that, like 4, and then I wasn't sure. I think at that point the study wasn't big enough, so it couldn't sustain it. One other time too, just by the way, if you remember, they came out with some data. I think on this potential treatment, and it went to as high as 10. Okay, and then they raised money in here, and then kind of just was loose and wide. So anyway, hopefully this could work its way back into the mid 3s. The CEO bought 1 million shares, where at like 3.25, and still only at 290, and so pop back into there. Maybe we get some upside traction. Looks like the market's in good shape. The IBB was solid. Some other bios had big moves to create some FOMO, and as we get closer, hopefully we get really super duper data and it takes out this 485 range, and we get paid. But this is an investment. This isn't a trade. This is something I've had on for most of the year. It should be in my IRA. I know a lot of you guys have it, so I figured I would go over it. And this was, what a few of the analysts have been saying, so you could look at it, you could read it, do your own homework. We've had a lot of these type of things where we look back like, oh my God, I can't believe how much we had back then. Anyway, including NVAX, if you remember, $4 or $8. But let's just move on. What else? You've had some, let's see, gold didn't really do much today, but it didn't fall apart. It's hanging in there. You know what? I don't have a SPY hedge on, so now I'm going to put a little bit of a SPY hedge on here since it's up a little bit after hours. I have a lot of longs on, so it makes a little bit of sense. But I kept I kept this gold call spread on. I have two of them, so I think it was pretty decent that it held here, and maybe it can go. I took off my VIX call spreads just to salvage it. Baidu, I'm still in. Didn't act so great today again, but it still looks fine. It's trying to break out. I thought earnings were tomorrow, but I think they're next week. So I trimmed a little bit of my options to be safe because they expire Friday. So they went from they were $1 to I was selling some around 3, and I still have some, and I'm in the stock. We'll see. JD, very hard. If you were positioning for a breakout, they had to push you below to come back above to then break out. So if you weren't in it still, it happens. It's not easy. It's not easy when that kind of thing happens. But we'll see. Sometimes that's what fuels the move. A false move down gets people out, gets people trapped short, and then you have your real move. So anyway, it's 4:44. It's definitely a complicated time as far as whenever you have an election between you, your friends, your family, etc., etc., your aunts, your uncles. I know I keep seeing my brother and my Uncle Charlie on Facebook. They hate each other because they're on opposite sides of the aisle and they're both far off. Anyway, I said this morning I was happy that the Republicans took the Senate or are taking the Senate. Hopefully, that's the way it looks. So this way we don't have just a full group in control of everything. So because then that could get scary, right? I'm not a supporter of the far left. I'm not a supporter of the far right. I kind of try and have a common sense in the middle where we all just try and get along and do what's right. Okay, and both sides of the aisle have a lot of things that are just right, but I think both extremes need to be pulled. So anyway, if Biden does win, I just heard him speak, and I know the guy's like, oh, Red Dog, he just is a good speechwriter. Okay, well, for now, he had a good speechwriter, and he communicated that he wants to unify everyone, and it's about, not blue or white, about all of us being Americans. And in the end, we're all humans, and we all have our own lives that we have to manage and control and take care of our families. And so everyone has a different interest on how it benefits them to have a certain stance and a certain group in leadership. So always have empathy for someone else's feelings on why, but bottom line is, I'm going to say it, I like middle ground. I like less government than more government. I do believe hard work gets paid off. I'm not into the cost average game of people's efforts, But anyway, I'm not here to talk about that. I'm just here to say the reason why I was Red Dog, we don't have a president yet. Why is the market up? I'm like, because I think the market was very worried that we would have a full blue wave and that things would get extreme one way. And now, we don't want stalemate. I don't want stalemate. I want a stimulus package. I want the small businesses to get some funding. They were forced to close and going out of business, and I think they need help. So I think that they're going to come to terms on a package that hopefully doesn't have too much pork to go to the states that fluff the pockets of other politicians, but whatever. But I think that Wall Street doesn't perform because they like a stalemate where nothing gets done. No, we all like things to get done, but we like it to be a process where the common sense meets in the middle, and hopefully we're not in a bear market of common sense, and we're we start to get a little bit more of that. And that's my recap for today. Go home, relax, and we'll get back at it tomorrow. Bye-bye, guys.